In this video, I'm going to be discussing with you the three risk management model that is advisable that you look into if you want to be trading professionally in this forex space. Three risk management models. Now, the first one is what we call conservative risk management model, and this is when you are trading just 1% of your account. Now just imagine that your account size is $1,000. If you decide that you will be trading with conservative risk management model, the implication of that is that on every trade you are only going to be risking $10 on every trade. Now, this conservative risk management model might be applicable to situation where you have somebody that is just starting out in the forex market and you are just trying to build your risk tolerance. You know, you might need to start with the conservative risk management model. At least it's going to help you to have, stability, when you are starting out in the journey of forex. And of course, you will now be able to see and probably be able to, see what works within the time frame where you will be using this conservative risk management model. And it will help you so that you will not be overly exposed to the uncertainty of the market. The mistake most people do when they come into forex is that they just have the mindset of, quick wins or flipping money. Because of that, somebody that is coming newly into an industry, you have not done it before, you don't even know how it feels to lose money. Just imagine you have worked for 6 months and you fund your account with the money, your salary, your savings for 6 months, only for you to blow it within 24 hours. Will it make sense? No. In fact, that's the reason why a lot of people, they just don't want to hear about forex, because the approach they use when they tried forex was that they just want to gamble the money or probably make huge amount of money within very short period of time. So we advise that if you are starting out, suppose you are starting out and you know yourself that you are risk averse, you really don't like to risk, more, you don't want to lose any money, but you now feel, let me try this forex thing because I know that at least I can do it within the confines of my home or my office, or you might not necessarily need an office to do that. And of course, if you know it, you can do it at a passive level and it will be like a passive source of income. Now, if you are now to try this, you might need to start with conservative risk management model, such that, of course, at PMI we trade in clusters. And one cluster is 20 trades. So before you can say that you are not profitable, you must have entered 20 trades with the same risk management model, the same trading system. Get this clear. Let me repeat that. Before you can decide whether you are making money or not, it is expected that you are trading with the mindset of you are trading in a cluster, which means you are ready to enter 20 trade with the same risk management model that you have chosen and the same trading system. You see that now? So if you now pick 1% risk management model, which is conservative, the implication of that is whatever amount you fund, you will only expose 20% of your money to the uncertainty of the market. So suppose that trading system you are using, suppose you just pick a trading system from one of the YouTubers that you have been following, and you eventually applied the trading system and it did not work. It means that after losing 20 trades, you have entered 20 trades with the trading system and all the trades ended up as a losing trade. You will only lose 20% of your account. So that will give you opportunity. It means out of this $1,000, you will only lose 20 times 10, which is $200. That will now give you opportunity to look for another trading system to apply and still pick conservative risk management model and trade another cluster. Before you try 3 trading systems, you will see a trading system that will be profitable. So if you are starting out and you know that you don't have risk tolerance that is high, we advise that you might need to consider conservative risk management model. Another situation where this conservative risk management model might be advisable is if you are trading prop firm. For instance, you have a prop firm that you can only lose maybe 10%, maybe in the phase 1 of the challenge. At that level, we advise that you should use 1%. So it means you know that you will not be able to trade a cluster because it's a prop firm. But if you now want to now trade a cluster, you can now use 0.5% just because of the peculiarity of the prop firm. But if you really know your trading system, before you enter 20 trades, before you enter 10 trades with 1%, you should pass the challenge. If you are certain of your trading system, but then if you know that I'm trading prop firm now, I've not even tested this trading system, it's better for you to use 0.5 risk management. It's still conservative, but because it's prop firm now, you might now use 0.5. But if you have tested your trading system and you know it, we advise that this conservative risk management model, you should use 1% of your account so that at least you can pass the challenge on time and maybe move to the next phase, then you get funded. Now, the next risk management model is what we call recommended risk management model. This is when you are trading 2% of your account. So in the case of this example, if you have $1,000 as your account size, it means you will only risk $20 on every trade. And of course, don't forget that you are still going to trade one cluster, which is 20 trades. So it means you are only exposing 20 times 20 will be 400. You are only exposing $400 to the uncertainty in the market for trading one cluster. So we recommend this especially for people that you already understand the nature of forex trading and you are comfortable with the risk associated with trading in the forex market. So you might not necessarily have to do conservative because you already understand that, of course, I need to risk this. Then you will now move to recommended risk management model. This is recommended because on the average, anybody that wants to trade in the market, we believe that you really want to make money. So if you don't have very big account size, trading conservative might not really give you the money you are probably looking for in a short while. So we recommend that instead of conservative, you can now trade 2% of your account. This is still fair. Even if you now lose 20 trades in a row, which is not possible, you will only lose $400 out of $1,000 of your account, which means you still have opportunity to trade another cluster and even trade another 10 trades after the second cluster. So by implication, this recommended risk management model is appropriate for somebody that is already into the game and you have an account size that is moderate. You can consider recommended risk management model. Now the third one, which is the last one, is what we call aggressive risk management model. This is when you are trading 5% of your account. And of course, we are not going to advise anybody to go beyond trading 5% of your account, because the implication of that is if you trade 5% of your account, or if you trade more than 5% of your account, you will not be able to take 20 trades with your $1,000. In this case now, this person will be trading $50 per trade. So it means for you to enter one cluster with your $1,000, you will trade $50 per trade, which we believe this is aggressive. And you will only trade this if you have the mindset to flip your money. You know, because I see a lot of people, they come into the forex market, they load $100 and they want to trade with $25 per trade. By the time you enter the first trade and it's a losing trade, you enter the second trade, is a losing trade. It means you are down by 50% of your account. You will not be stable, because for you to have funded $100, it means you don't really have money in the first place. So if you have $100 and you fund it, you might need to look for a broker that gives you high leverage if it's maybe permitted in your country, or you look, if it's Nigeria now, look for a broker that can convert your money to cents. That will be preferable, such that instead of having $100, you will now have $100 times 100, which will now be 10,000 cents. Now you get it now. So you will be able to now trade comfortably with your small account. However, anybody that will use aggressive risk management must come to terms that you are overly exposing yourself to the uncertainty of the market. So I will not advise this, except if you are already resolute in your mind that this $100, this $500, this $2,000, I want to be aggressive on it, which means you have the mind of flipping it. Now, instead of now flipping it like the conventional gamblers on the internet do, you will trade 5% of that account. With that, you have 20 slots. You have 20 trades, and which means you are still trading within the confine of the cluster framework that we discuss here. And this is what is recommended for anybody that want to flip account. So if you want to flip any account, look for any amount that you feel you can lose. You will now divide it by 20, which means you are trading 5% on each trade. And with that, by the time you give your entry trials, before you blow 20 trade, you should have a win that will give you the money that you are looking for. These are the different risk management model that we advise people to plug in to use in the forex market, especially if you are trading with our trading system, because we really want you to come into the forex market and stay for a long time. It's not something you want to just come in and test it out and blow your money and conclude that this thing is not working. We want you to come in, pick the best risk management model that you feel that suits your person. Then you trade it systematically with the concept of cluster trading. Then after 20 trade, you evaluate whether you are really making money or not. Then you can now decide, do I really want to do this looking forward, or I want to back out? I want you to stay glued to this YouTube channel. We are going to be giving you a subsequent video that will really show you how to plug in each of these risk management model to different types of accounts, that you can now say that, okay, I have this account, I'm using 1%, I have this account, I'm using 2%, and this account, I'm using 5%. So you will now be trading at a relaxed level. Till I see you in the next video, thank you for listening. God bless you.